The reflation trade was the subject once again of Miles Udland's morning brief. This is something we've talked about a lot, of course. And as we've seen the zigzag over the past couple of days, Miles, what was interesting on Monday, even as we were seeing the sell-off, you were watching a few key stocks that were higher, Peloton, Wayfair, among them. And so you were looking at what was going on through sort of that micro lens. But in this morning's morning brief, you zoom out and look at a different kind of chart that applies a more macro lens to all of this.
Yeah, and this data comes to us, or this chart comes to us from Capital Economics. And really what it does is it breaks down three distinct components of the rally, or just of this market moment. And so it's a little bit involved here, but what we are looking at in the purple line is the NASDAQ's performance relative to the Russell 2000. So big cap, tech growth stocks against smaller cap, more value and cyclical focused stocks. And what we saw, in the beginning of this chart, during the beginning of the pandemic, was that growth outperformed. Everybody knows that story. Tech was the leader. A lot of those names are stay-at-home focused. They're also just, as you would say, secular growers, businesses that are expected to grow, let's call it double-digit rates, even in an economic environment where things aren't growing that quickly. Now, the decline in that ratio, the decline in the purple line, is the Russell starting to outperform. That's smaller caps, value, cyclically focused stocks that do better when the economy does better, having outperformance relative to, your big cap FANG name. So think about it quite simply. Local regional bank, they make money extending loans to households and businesses. They do better when the economy does better. Relative to Facebook, which is, probably just going to grow 15% forever as they continue to take over the world, right? So you have a relative preference in a high growth environment to a regional bank over Facebook. So that's the decline. And then we've seen that trade come back. FANG, we've talked a lot in the last month about FANG's leadership within the market. A lot of questions about the growth cycle. What does it look like on the other side of COVID? How much longer can this go? That's, a reversal of sorts in the confidence investors had about the reflation trade. And then the blue line that follows that line is just the 10-year, right? 10-year, you can think about it. You can decompose the 10-year yield in a lot of different ways. Brian Chung can come tell us about how it's really the geometric average of expected 3-month yields rather, over the next 10 years. And, he can tell us what that exactly means. Or you can say, as I like to, and it's an imperfect thing, but the 10 years basically expected economic growth, at any point in the cycle. So a slight oversimplification, of course, but as we saw the 10-year move higher in the beginning part of this year, that's essentially investors saying, we think the economy will grow faster. The 10-year coming in, it's done that for a number of reasons of late, but a part of that story is that there's less confidence, guys, that the economy is going to grow as robustly as we get through the pandemic, as perhaps we thought, really in that March and April timeframe. When we're talking about trillions in infrastructure spending, more fiscal, let's call it a looser fiscal stance maybe, and also easy monetary policy. Questions about all those trends have come up, and so we've seen, some of the heat come off that trade a little.
Well, Miles, if we do in fact get that second half growth slowdown, can these stocks reflate?
Well, I think the thing to always remember with markets is that that's what's been priced in now. Mm-hmm. So what we're seeing now is in anticipation of the reflation trade coming off in anticipation of slower growth in the second half of this year. I think what this week maybe is serving as the nadir, perhaps, of the reflation trade and a realization that, okay, the Delta variant is very serious. Maybe the second half of this year isn't quite as strong as we thought, but we are not going to see 2020 situations here in the U.S., at least in 2021. And so while there's a reason to, as strategists like to say, re-rate the trade, maybe there's not a whole reason to bail out of it wholesale. And so that's why, and as Capital Economics notes in their commentary on this, we've seen about half of the move retraced. So let's call it investors are half as confident in the economic recovery as they were a few months ago, but they haven't, fully lost their nerve on that.
What I'm curious about, too, is sort of where's equilibrium on this? I mean, markets do tend to have these sort of seesaw-y kind of movements, right? When they're trying when we're sort of in this uncertain environment like right now, which is really most of the time, if you think about it, I guess. Mm-hmm. But so maybe we're already in equilibrium, right? Maybe what you're describing, this sort of seeking of an answer on these questions about reopening and on economic growth is already equilibrium, and where we are right now, where these two groups are sort of switching back and forth between what's in favor.
Yeah, and something that I didn't, and look, the morning brief, it's only supposed to be a couple hundred words, right? I'm not going to get into it every day. Well, I like chatting about it, right? Because I could talk about the things I didn't put in there. One of which was this idea, Julie, as you talk about, this is like I would call this a descriptive chart, right? We are describing the market as it has happened. I don't think any of this conversation is particularly prescriptive, right? Here's what will happen next. None of these trends specifically augur towards any outcome in any of these asset classes, but I think it is important during these more volatile moments to find really clear descriptive ways to say what has happened, how has the market acted, and to kind of your point be able to say, okay, here's the lay of the land. We can all guess at what happens next, and we are not paid to make a bet, right, on what happens next. That's for the folks who come on, the strategists who come on this program. That's their job. But I think this was a nice entry point into being pretty clear about here's how things have gone, and these are the trends that are interacting with one another on a daily basis.
Miles, new Slack message from our very own Brian Chung, loyal viewer of the program. He said,
boy.
you're overpromising, I guess I would suppose, on his ability to analyze geometric shapes, whatever you just mentioned before.
Well, I just know there's a difference between the average and the geometric average. But I don't know what it is. It's just different.
Yeah.
Well, he's going to be here in the next hour.
That's what I've heard, yeah.
Challenge accepted, and we'll see what he has to say on the geometry lesson.
He has a master's. I don't have a master's degree. So that's what we signed him up for.
Then obviously he'll be able to do this.